Now here's another point of departure from what almost anybody else would do. Everybody that I know or knew as an analyst would have created a model for this company and would have projected out its earnings and would have looked at its return on investment and da-da-da in the future. Warren didn't do that. In fact, in going through hundreds of his files, I've never seen anything that resembled a model. And then he took all the historical data, quarter by quarter, for every single plant. He got the similar information as best he could from every competitor they had, and he filled pages with little hint scratches of all this information, and he studied that information, and then he made a yes-no decision. And it's a very simple thing. There's nothing fancy about it, and I think that that's another important lesson because he's a very simple guy. He doesn't do any kind of discounted cash flow models or anything like that. For decades, he just says, I want a 15% day one return on my investment, and I want it to grow from there. Ta-da! And the way he thought about it was really simple. It was a one-step decision. He looked at historical data, and then he had this generic return that he wants on everything. It was a very easy decision for him. And he relied totally on historical figures with no projections. I think that that's a really interesting way to look at it because I saw him do it over and over in different investments.